What's going on, buddy? Jeff here. Welcome back to the channel. All right, guys, we're going to talk a little bit about AMC options prices as of right now. Why are they so low? So somebody reached out to me inside the group asking why their in the money options contract was really not worth that much. Okay. And going back over the past, whether this year, the year prior, normally it would be worth a lot more. They're asking me a little bit about it. I kind of answered it, and it seemed like as soon as I answered it, I saw this all over Twitter, and people were kind of talking about it as well. So I want to explain this to you. It's very important. Okay. Now, that does not mean to go out and buy options, but what it does give the opportunity is for market makers to get into a position where they really trip over themselves. And that's when your premium can really explode. I'll break everything down for you guys. So let's get right into it. First off, I want to make this video as simplistic as I possibly can. Okay. So there are numerous factors that go into pricing an options contract, what market makers use to be able to price these options. One of the big things, okay, is implied volatility, and they use the VIX, which is ticker symbol VIX. Okay. When the VIX is high, which is generally anywhere between that, really over, I would say over 20, but lately it seems like it's around like that $26 to $32 range, is a very high metric on the VIX. It means there's a chance of high volatility. What I mean by that is you can go and take a look at when VIX was really high. The market would move, $10, $12 in a single day. SPY would go from like 400 to 388, okay, and vice versa, 388 up to 400. It would move a lot. And therefore, when they're pricing these options contracts in order to, list it at a proper premium, they can attract a higher premium, which is good for option sellers because the expected move is greater. When the VIX is very low, the expected move is very low. For example, if you look at it kind of lately, the way, just SPY has been moving, okay, outside of obviously these couple weeks right here. But if you look at it over the past few weeks, it's really only been moving a few dollars, maybe, 1%, 1.2%. I think today was about a 0.5%, maybe over. And that just shows that investors and all market participants there's not a lot of fear in the market, and they're not expecting a lot of volatility. Okay. So this is another factor. Like I said, this is one of the main factors that goes into, pricing options premiums. You can go check out this article on Investopedia. Just type in VIX affect options premium. You can read a little bit more about it. But in short, as the VIX is the most widely watched measure of broad market volatility, it has a substantial impact on options prices or premiums. Higher VIX equals higher prices for options. Lower VIX, lower prices for options. Also, guys, there's a pretty direct correlation, okay, to when VIX begins to sell off, the market begins to grind. Okay. There's a lot of traders that I follow very closely that monitor the VIX really as a huge indicator into, market direction. I use it, I would say, but this is not something that is, my right-hand tool, okay, in my toolbox. So that brings us down to AMC. So let's take a look at where AMC is sitting right now. Obviously, this is the 3-week chart, guys, so it's not going to look the best, but let's just zoom in a little bit further, take a look at the 10-day chart. We've kind of been sitting around this $5 price point. If you take a look at some of these options premiums, one thing I would point out to you guys, we are currently sitting at April 19th. You go out to a monthly contract May 19th. All right, the price right now of AMC at market close was $5.10, a $5 contract, okay, which has already is 10 cents in the money, is currently being priced between 41 cents and 43 cents. Okay. So as some people might call this, manipulation and so forth, guys, this is, like I said, it's directly correlated to the implied volatility. Okay. Or like I said, the VIX being as low as it is, meaning right now, if AMC was sitting at $5.10, okay, but the VIX was back where it was, say, just pretty much a few weeks ago, okay, sitting up around this 20, or let's go out even further, okay, and where it was around this 30, everything else the same on AMC. You still have a month away. It's sitting at $5.10, a $5 contract. Chances are that premium would be somewhere around the $1.20, maybe even $1.50 range. It could be even higher, a little bit lower than that. But the point behind it, it would be much higher because market participants are expecting a more volatile move, and chances are there's going to be larger swings. It's very good for option sellers. All right, just remember high VIX. Just know if you are playing options, high VIX, you're going to get those big moves. It's the opportunity to really smash some of those crazy percentage gains. Obviously you see, all over Twitter. I don't trade that way. I think it's a little bit too wild for my kind of taste. Personally, I like to, take things a little bit slower and, really be able to focus on them and not be in so much panic. But like I said, that's just me. But just remember that. So if we take a look back at AMC, just understand that, like I said, guys, it's not manipulation, not at least, this way. They manipulate the options chain in a completely different manner. It's just directly priced off of VIX. You can also look over here. It's on Thinkorswim, the implied volatility. If you can see this, AMC is obviously going to attract a little bit higher implied volatility. Generally, this also does have to do with open interest and volume. But it's, sitting at anywhere between, let's say, like the 130 and, you've got a high out at 180, which is all the way, up in July. But we're sitting close around that 150, 150%. And if you notice, you remember AMC was up around like 280, 320, really expecting some of those bigger moves. On the contrary, guys, what does this all mean? So first of all, I definitely don't want to, suggest buying options, but generally when, VIX is high, premiums are high, it's good for option sellers. VIX is low, it's, potentially better for options buyers. But what can happen all of this is if AMC or any ticker really gets to be ramping, that's when that intrinsic value of being in the money is going to cause market makers to trip over themselves, really forcing a gamma run up. You can go back and correlate, where VIX was sitting, back in 2021 when we had some of those massive run-ups, and it was, plenty of other stocks, obviously just at AMC, that had massive run-ups, and kind of correlate those two together. So guys, I hope that did, help you. I just want to give you a little bit broader of an overview. We're going to take a look at this chart I haven't shown in quite a while. This is actually the algorithm that I'm going to be releasing soon, guys. I know I've been saying that for a little while, but I really want to make sure everything is really set. But this triggers at candle close. It had, four triggers for longs came in. You're buying the dip all 3 times on SPY. I did have this last little long that came through right until market open. I might even kind of try to cut that off to becoming so close to the market close. I think QQQ played out pretty well. I had a little short at the open and then a couple longs as well. But let's take a look at where the entire market is sitting as of right now. I want to show this to you guys. It's actually, I don't show this chart quite often. We'll take a look at the futures. But here it is. And here's this kind of channel that we've just been bouncing off in between really ever since that, we had those October lows, and it's just kind of been bouncing up, a little bit of, movement back and forth, with your, horizontal levels. But as long as we remain kind of in this channel, we did have that false breakout to the downside. Everything still does remain bullish to the upside. 4,200 is a big overhead. Okay. This is the multiple time we've tested. We've rejected off for quite some time. You zoom out, look back at where it was a resistance all the way back, into quite a while ago, almost 2021, but beginning of last year. You can kind of see how it's acting once again. Once we start to fail and break this for the second time, this trend line right here, get out of that channel, that's when we can look for things to roll over. And then eventually we're going to look for this downtrending channel to once again act as, support, which it once did, guys. And this is the channel going all the way back from January that you've seen for quite some time, or this trend line, I'm sorry, not channel. And, we broke through it finally back in early January, came up to that 4,200, and then once again had back tested that. Kind of looked like we were going to break through it. And then once again, have continued to move to the upside. So keep that chart up, guys. I'll post this for you guys on Twitter. It's been one that's been acting pretty well. I like the chart on 2 different softwares because, like I said, I have certain daily levels and then over big overviews. So, but guys, that's it for this video. See you in the next one.